Oh, hi. Didn't see you there. Let me talk to you about overtrading. I never thought that it would be me. I do have an obsessive personality, but I wouldn't say that I have an addictive personality. And I think that there's something about options that is very addictive. And I fell prey to that. And I've noticed my trading escalating, and I've noticed that gotten kind of manic about it, and I have taken significant losses over the last 2 days. And they tell you that options trading is risky, and they're right. Um, But I think that with the proper management, one can avoid many of the pitfalls of options. And I'm going to talk about that, but first I'm going to review my trades. This is going to be kind of in depth. It's a sad, sad story. And I mean, if you watch the whole thing, thank you. And if not, I understand. I don't have my rules formulated. Um, But I will say that I my new rule for now, until I am sure that my problem is under control, is I am only going to trade with $100 every day. So that's going to be my max spending limit. My max loss, significantly less than that. I'm going to give myself one shot per day to force myself to wait and be 100% certain on the shots that I'm taking. So, without further ado, my disastrous day. So I started the day not even wanting to trade. I recognized that I have life stuff to take care of. I need to do dishes. I want to shave. And I didn't sleep very well last night. So um, So I was laying in bed watching my chart setup, my multi-chart setup, and I noticed that PLTR was having quite a pullback, and so I grabbed my mobile app, um, and I grabbed some calls right here. I grabbed a call because I only have $50 in my mobile account. So I grabbed a call right there at this green arrow, and then I sold it less than 5 minutes later for a profit. I bought it at 48, sold it at 61. It was a $29 call. If I had held it another couple minutes. Um, Actually, I did. I got greedy. It went up to 85, and I kept holding. I wanted $1 for it, and and then as it was pulling back, I said, well, I guess that's what I'm getting, and so I sold it for that small profit. And then I was feeling quite good about myself, even though I shouldn't have. I may have made a profit, but I told myself I wasn't trading today, and I should have respected that. But I was watching PLTR on, I think, the half-hour chart on my computer, and I saw that it was um, putting in this bottom here. And so I ran over, and uh, my desktop E-Trade was already up, and I grabbed this call. It was a it was a 29 strike call. I didn't think that PLTR was going to get back to 29, but I grabbed the call, and I made $5. So that was pretty good. I was feeling pretty smart. Um, by the way, these lines, I don't usually play with the lines, but I don't know how to put volume profile on stocks to trade. So there's a lot of congestion on PLTR, uh, and the band is from 28 down to 26. So this is kind of dead center of that. And of course it changes depending on the chart that you're looking at. I think on my 10-day chart, 2750 was like dead center. And there was a lot of congestion in here. This was the previous close, so this would be the red to green level, and this was the open. So I did not think that it was going to come back up to 29. I just grabbed that 29 strike call in hopes of flipping it real quick. And so I did. I caught this little bounce. It was a nice little $5. And then I sat at my computer and I watched. Well, I noticed that it was struggling here, and at the time, this was looking like a morning star. Let me switch it to the 5. Okay, switched it to the 5 and back, and my notations didn't hold, so I'm going to stick with this chart. I saw not a morning star, a shooting star. That's that flat bottom with the top, and it was on high volume. And so I thought, well, this is going to pull back. It turns out I was right, but so I grabbed the put right here, and I grabbed a 27 strike put for 54 cents, and then this hammer started to form, and maybe I should have known better because of the low volume, but it looked to me, because a hammer is a bullish signal sometimes, and so I thought that it was a bullish signal, and I actually flipped long. Let's see, where did I sell that put? I didn't mark it on the chart. 1058. So I sold it. I sold it at 1058. I sold it right here. Let's see. Arrow tool should be a pink one. So I flipped long right before that dump. This hammer tricked me. Or I tricked myself, or whatever. So I sold my put right there, and it looks like it was diminishing in value. I sold it for 44 cents, and I had bought it for 54. And then I flipped long. I grabbed a call here. Fortunately, I was smart, and I only grabbed one. So I can give myself credit for that. And then, of course, it dumped. And then when it bounced a little bit, as one might predict, I sold into the bounce for a pretty lousy loss, 20 bucks. And at that point, I should have walked away. I shouldn't have been in those trades in the first place because I said that I wasn't going to trade today. But here I was, betting on this stock. So I see that it bottoms out here, and it looks like I grabbed a call, but I wasn't sure what was going to happen. I also grabbed a put because I thought that it might sink below 27, and I thought that it might go up to 27.50. So rather than just wait for a sign, I hedged. I bought a call and I bought a put. And then I sold my call for a small loss because I thought that this was going to keep going down. and I was incorrect. When it started to do this here, this was a low volume kind of doji, and so I thought that it was going to arch the same way that it did before. So I doubled down on my put, and I was wrong. And you can see that this candle here is about the same width as the volume, and the volume was sustained. So that should have been a pretty good sign there. But then I believe just as this candle was done forming, I um, I think that the volume here was actually sinking lower, and then there was a rally at the last minute. And so I thought, it was a last minute rally, the move's going to get stuffed, and then this candle kind of confirmed my thinking. It pushed the rally back down, but not far enough as it turns out, and this candle popped up. So I was risking. I recognized that it was back above this consolidation zone, um, and so not as many people were stuck anymore. There was a lot less fear in the market now that it's back over 28. And so I cut my puts there. And I think that that was a good idea, but the problem is with trading options, the price of your options are not directly reflected in the price of the stock. So so you see weird moves like the price coming up or the stock price coming up, but the options price going down, which happened in here. I was also watching the call ladder, and that happened in here where the price was coming up, but the stock price was coming up, but the options were fading. And I, I guess I just don't know enough to say why, but I can't say it definitively, but I believe it has to do with implied volatility, and that affects. There's a lot of Greeks. I think it affects delta. So your implied volatility affects the rate of change with the stock price. And then you've also got theta decay. These expire Christmas Eve, 24th. So I sold my puts and I thought, well, hell, if I'm selling my puts, I might as well flip long. And I didn't buy here at the top. I got a decent price on them here. But then again, the price of the call options did not increase with the stock price. And eventually I cut my losses as the stock was fading. So at that point, I proverbially walked away. I was sitting at my desk. Tim Linto had a great webinar. Thank you, Tim. I doubt that he's listening to this, but thank you. He was talking about how he had a hard time when he first started trading, and it was really encouraging to me after today. So I guess well, that's his story to tell. So I walked away proverbially. I took a breather, I distracted myself, I thought about other things, but I kept a side eye on this stock. And then I noticed, all right, now we're gonna switch time frames because it's not as clear. Oops, sorry. Let me pause this. There we go. Sorry if you were staring at my screen and that was shocking. I had to get the chart to where you could see what I'm talking about. So this was on my mini chart on my right screen. and I saw this looks like a reversal. It looks like an ascending triangle, and so I placed my wager once more. So, uh-oh, right now I need to pause it again and work all this out. Okay, here we go. So what I did was I waited, I made sure that it was going to break the 2820 barrier, and when it did, I grabbed a call. I grabbed a 29 call, and I sincerely believed that it was going to go to 29. I don't feel like this was another example of overtrading, but I'll get into that. Um, so the reason that I thought that it would go to 29 is because 28 was very clearly this resistance level, and then 27 was the bottom. And when you're looking at ascending triangles, there's a way to measure your target. So basically, you take the resistance, you subtract support, get about $1. You add that to resistance, and that should be your price target, 29. So I grabbed one call for $50, and I told myself I was not willing to lose more than $5 on this stock anymore today. And it did break out. I was profitable for a minute, and then it failed, and I sold for a $4 loss. But it looks like I saved myself $45 because right now it's at 30. So, well, now it's not trading because it's after hours. But this last trade was this last trade I felt okay with. I felt okay about. I didn't necessarily have a clear head. I was still pretty upset, but it was forming a pattern that I was familiar with and have faith in. It was a reversal pattern, and one of the more bearish patterns that I can think of. It just happened to fail this time. Totally understandable. Let me see if I can put those drawings back on. Yes, sweet. All right, let me get these out of the way. Okay, the lines are out of the way. We're a little more zoomed in. Again, I'm sorry if that was shocking. But I want to talk about this because I have this problem a lot where I am onto something, but I keep screwing it up. So with this put, I was dead on. That would have been a big money maker. And then with this call, I convinced myself I was wrong here, and I assumed we were going to get like a J hook, and we did not. So that was probably my biggest mistake of the day, and that's probably what screwed my mentality the most. I think that if I had got this put, or if I had held this put and not got this call, I might have walked away. I might have called it a day. What am I trying to say here? For the most part, I was on the right track. That it's not gonna buy me a new monitor for screen space, but I needed to have more conviction and I needed to wait for the right price for those contracts. So I put together 4 little notes for what I was trying to say. One, avoid overtrading. Just don't do it because it will screw you. So if you're having a losing day, don't keep trading. Um, I I know you want to make your money back, and this is to me, by the way. This is to future me for when I watch this later. I know you want to make your money back, and I know that you can make your money back. There, there were tons of opportunities on this one stock today. Um, but if you're over trading, you're not thinking clearly, and you're going to dig yourself further in the hole, and it's going to be bad. Number 2, maintain conviction. If you know your patterns, you know your technical analysis, and you know what you're looking at, then stick to it, you know? Not to the point of risking more than you care to, but this put, man, this is what screwed me. Flipping long. I mean, if you're bearish on something, you have your reasons, and if they're good enough reasons that you're going to make an investment, then if you decide you're wrong, definitely cut your losses. There's no shame in that. But I don't know about just flipping the other way, because when I was right, it hurt. Also, no bullshit hedging. If you know that you're right, you're right. Um, Stick to it. Don't second guess yourself. Don't don't fucking hedge. You're just gonna wind up fucking yourself. Um, it's happened to me twice now, so don't do it. I always cut the wrong I always cut the wrong half of the box. So that's basically what I was doing, was boxing my trade. Um, and I did it wrong. So that's no good. It's no good. Let's see. I mean, that is a strategy. It's called a spread, I think, where you, um, that might be where you sell one and buy the other. I don't know. I don't know enough about option strategies. I'm trying to trade these like penny stocks. Anyway, don't fucking hedge, at least until you're successful with one thing, then maybe consider the other thing. But the reason I'm hedging is because I'm not successful. So this boxing idea is not working out for me. And maybe I'll come back to it later, but wait for the right time and the right price. And I think that has been a big problem for me. I wind up in a weak position thinking that the contracts are going to follow the stock price. And for the most part, they do. But when they don't, they can really rapidly lose or gain value. And so one of the problems I had in here was I got in at the wrong price. When I sold it, I was 40 bucks down, or it was down 10 bucks from my entry. And I could have got in there or averaged down there. I could have got in there, but I did not. And I got in earlier, and so the decaying price, or the falling price, kind of tripped me up. So that's something to watch out for. If you think it won't go lower, it probably will. Um, and then my next note to myself is to risk the option price, not the stock price, for the very same reason. I did do that here, and I'm kind of proud of it. I said I won't lose more than $5, and I didn't. And even though this seemed to be able to hold support here at 28, according to the price at the time and the level 2, it seemed possible that it would hold it. It hadn't broken under my risk yet. Um, if I was trading this as a stock, I would have had a different stop. Probably not 28, probably the bottom of this candle. And I would have got stopped out. But the point is that by that time, the price of the contract was down in the 30s. And that was far more than I was willing to risk. So, um, so I need to base my risk on the price of the contracts and not on the price of the stock. So again, in summary, avoid overtrading, maintain conviction, wait for the right time and the right price, and risk the option price, not the stock price. So I'm going to actually have more rules for myself that I'm going to come up with, and I don't know if I'll share them or not, but those are 4 important notes from today. And here's another bit of technical analysis. This is the 15-minute chart, and I was watching the 5, but with this shooting star type, I know it's a doji, but you know, it's kind of shooting star-esque, followed by this hammer. That is a definite sign of this pullback, especially since it was a low volume hammer. So if you watched this whole thing, I really hope that it helps you. This is just a review for me, really, and I put it out there in order to hopefully save people from my same mistakes. So I wish you the best. Thanks for watching.